Bitcoin has shown its resilience by rebounding past $28,000. A day after an unwelcome U.S. central bank interest rate hike sent the price spinning downward. Despite fears about federal monetary policy, increased regulatory activity and banking unrest, investors sent the largest cryptocurrency by market capitalization floating. It soared above $28,000 again. The number of Bitcoin addresses with a balance of 1,000 Bitcoins is declining. This suggests a reluctance among institutional investors to add BTC to their coffers at the moment. Nevertheless, the crypto market has shrugged off events such as the SEC warning Coinbase and the arrest of Terraform Labs founder Do Kwon. The resilience of the market gives confidence in the ecosystem, community and chance for adoption. This article provides an overview of the recent developments in the cryptocurrency industry. It discusses the rebounding of Bitcoin prices past $28,000, despite a disappointing U.S. Federal Reserve interest rate hike. It also looks at the decrease of Bitcoin addresses with a balance of 1,000 Bitcoins, which may suggest a reluctance among institutional investors to add BTC to their portfolios. Furthermore, it outlines several regulatory and enforcement actions, such as the SEC's Wells notice to Coinbase and the SEC's lawsuit against Tron founder Justin Sun on allegations of unregistered securities and fraud. The article also covers other topics such as the MakerDAO decision to retain USDC as its primary reserve even after a depeg, Arbitrum's daily transaction count hitting a record high, Golden Tree's $5 million of sushi movement, and Metaverse NFT trading volume hitting a new all-time high. The Bitcoin and crypto market has seen a sharp rise in recent weeks. This is due to rising fears of hyperinflation sparked by the collapse of several banks, including Silicon Valley Bank, Signature Bank, and Silvergate Bank. Elon Musk has sounded a warning to the U.S. President Joe Biden, and the Federal Reserve has continued to raise interest rates. These events have led to a decrease in the yield spread between 2-year and 10-year U.S. Treasuries. This indicates that the financial markets have taken into account the Fed's decision to hike interest rates. This article provides an overview of the recent banking crisis and its effects on the Bitcoin and cryptocurrency market. It delves into the details of the collapses of Silicon Valley Bank, Signature Bank, and Silvergate Bank and the corresponding decreases in the bond values of the banks. It also examines the impact of the Federal Reserve's decision to raise interest rates and the resulting decrease in stock markets. Furthermore, it discusses the reaction of Elon Musk to the news and looks at how the yield spread between 2-year and 10-year U.S. Treasuries has decreased due to the Fed's actions. It concludes by providing commentary from Ilya Volkov, the chief executive of Hodler, on the positive impact of the Federal Reserve's reduced rhetoric on the financial markets. David Schwartz, Ripple's CTO, has criticized the SEC for failing to provide clear guidelines on cryptocurrency regulation. In response to Coinbase's chief legal officer's statement, he suggested that the SEC needs to provide reasonable rules for crypto in the U.S. Coinbase is confident in the legality of their assets and services and is open to a legal process to provide clarity. Schwartz has also suggested that the fact that no other crypto company has received a productive outcome from seeking a no-action letter from the regulator makes it unlikely Ripple would have benefited from it either. David Schwartz's comments reflect the opinion of many in the crypto industry that the SEC needs to provide clear guidance on how digital assets are regulated. Coinbase's statement that they are open to a legal process to provide clarity is a positive step towards creating a more transparent environment for the industry. It remains to be seen how the SEC will respond to the company's request.